Welcome back. Hoping to retire? Well, you'll have to make sure you're ready financially. This afternoon, we have Lancz to go over what to focus on when it comes to saving up. Thanks for being here today.
My pleasure.
Let's start with maybe people who are getting close. They're like, I'm a few years away, or I'm watching things very, very closely. So they know the S&P 500 has been up about 15% this year. But what does that really mean overall, and what do we think about for the second half of this year?
Yeah, Amanda, the S&P is up 15%, but the average stock is up 4.1. So it's been led by tech, driven by AI, and that's for real. I mean, I think you're going to have a lot of volatility, but there's going to be risk as the stocks move up. So like to give you an idea, the S&P 500 is 30% of it is comprised by just 5 stocks, and they're all AI related, mega tech, trillion-dollar stocks. So even though you own 500 with the S&P 500, 5 stocks are driven, as far as performance for that.
Oh wow, we've been hearing a lot about NVIDIA. That's been the name. That's been the stock that I've been hearing a lot about. But yeah, so do we think that that's going to continue to be the trend though? These few tech stocks are going to drive the S&P.
It seems like it will be, but that adds a new layer of risk. So it's a little bit different than it was before, where you thought, oh, you're in a diversified index. Now you're in basically 5 stocks for a third of your portfolio. So if you're close to retiring, like you were mentioning. It's hard with bonds. Bonds have lost and underperformed 4 years in a row, lost money 3 of those 4, including being long-term bonds are down this year. Everything else is up, but it's a matter of being in the right areas and being selective, I think, more important than anything.
I always remember, when I was younger, first started investing, it was, tech stocks are kind of risky, is that still the case? Or, I mean, are they starting to get a little less risky? AI is a real thing, as you said.
Amazing that, like Warren Buffett, one of the best investors in the world, didn't even invest in technology till 2016, where he jumped into Apple. Now it seems like everybody's investing in technology, and it goes in cycles. In 1999, everybody was investing in the dot-coms, and that ended up, as far as to be a bubble, and a lot of people lost money. This will eventually get to a point probably where it's going to be high risk and not worth the reward. I think we're still in the early stages, so it's okay, but somebody, again, close to retiring might want to take some money off the table as the market moves up.
Okay, you mentioned bonds, a little risky there too, you said, with interest rates or,
Exactly. With bonds, they thought that the Fed was going to lower interest rates 6 times for 2024. They haven't lowered them yet. They might lower them once. So that's why bonds are down. They thought interest rates were going down. So if interest rates stay up, you're not going to make money in bonds. You're taking more risk. And long-term bond is paying, 5.5%, 6.5%. Is it worth that risk of losing principal for that type of return when you could get that in a CD or in a money market? So again, somebody closer to retirement might want to just invest in a money market fund or a T-bill, paying over 5%, rather than investing in long-term bonds where you could lose money if interest rates stay up or go higher.
We have an election coming up, and I think everybody's kind of got their eyes on that too, and they always go, well, is it going to have an impact? Do you think there will be much of an impact depending on who gets elected in November?
Short term, just like with the, as far as debate, some of the Trump type stocks moved up after the debate, and the Biden type stocks moved down. But again, we're real early yet, and that's usually more reflex reaction more than a long-term investment. So again, those are more speculators than really investors, which is what you should be looking at with retirement, is long-term investing and getting in the right areas with the right risk reward, and not just speculating on who's going to win the election.
How about those who are just now getting started maybe in their careers, and they're like, I'm not even thinking about retirement, but when should they really start thinking about it, and how do they start?
That's a great question. If you're in if you have a retirement plan offered at work and they match, definitely at least put in as much money as you can, especially up to the match. So if they match up to 6%, put in the 6%, because you're going to get that money, and even if you invest it conservatively. But the trend would be that if you're younger, take more risk and invest for growth. So you can get these apples, at $3 a share like we bought 20 years ago, or the Costco's and what have you, and really, build up your retirement so you can retire early and go yachting.
That's what I was going to say. Is there going to be a yacht in my future? I hope. I still have a little bit of time to save my pennies, but good information this afternoon. We appreciate it. Thanks for being here today.
Oh, my pleasure.
Yeah. We'll be